JAMB 2017 Principle of Accounting, question 18 says revenue receipts of a not-for-profit making organization are recorded in. The options are as follows: A. Bar purchases accounts. B. Statements of affairs. C. Statements of financial position. D. Income and expenditure accounts. For one to give a correct answer to this question, must understand what non-profit making organization refers to. Non-profit making organizations are simply organizations that do not make profit. They are not formed for profit making. And good example of such is corporate society. And apart from that, other associations. Now, the correct option to this question is option D, income and expenditure accounts. Now, why do we say that income and expenditure is a correct option? It is a correct option because other items we have here, like the statement of financial position, talks about the various books of accounts of the organization. Statement of affairs here has to do with the balance sheet, and the balance sheet contains the asset and liability of the business or the organization. Apart from that, we have bar purchases accounts. That is just a single account that has to do with purchases, and it has to do with expenses. But we are talking about revenue receipts, and revenue here is an income. An income cannot be posted to purchase accounts, and it can be posted to statements of affairs. It can be posted to statements of financial position. The statements of financial position here has to do with all the accounts of the organization, ranging from the statements of affairs, the income and expenditure, and others. But the income and expenditure has to do with accounts where whatever is received and whatever is spended, or whatever the expenses of the organization are recorded. Of course, in the income and expenditure, we have the debit side and as well as the credit side. The debit side has to do with all items or transaction that has to do with the giver, and the credit side has to do with all items or transaction that has to do with the receiver. So the accounting principle is applicable here. Unlike the profit and loss account, where you have the debit side, the income is recorded, and the credit side, the expenses is recorded. So in this case, you use the accounting principle. So the corresponding entries are recorded. So whatever that was recorded in the profit and loss on the debit side is recorded on the credit side of the income and expenditure, and whatever that was recorded in the profit and loss on the credit side is recorded on the debit side of the income and expenditure. So the income and expenditure accounts, the credit side carries income, and of course revenue is part of the income. So the correct option to this question is option D, which is income and expenditure accounts.